Latest data from the National Bureau of Statistics shows that in the third quarter of 2021, that's quarter 3, Nigeria's merchandise trade rose by 51% to 35.07 trillion naira, recording a trade deficit of 8.8 trillion naira in the year under review. According to the report, the 51% rise in trade merchandise is attributed to sharp growth in imports, which soared by 60% year on year as the importation of premium motor spirits, durum wheat, gas, oil, as well as machinery and transport equipment accounts for a substantial portion of the country's imports in the same period. The data also shows that crude oil contributed about 90% of total exports, exceeding the 80.29% contribution as of the first half of 2021, making analysts express concerns about the rising trade deficits as the country operates a monolithic export profile. Well, to give more insight into this, of course, to make sense of it, I have Mr. Ayorinde Akinloye. He's an investment analyst with United Capital PLC. Ayo, it's really good to see you. Thank you so much for your time.
Thank you, Tolu. It's always a pleasure to be on the show. Thank you for having me this afternoon.
Yes, like I said in the intro, trade deficit is set to have widened by the third quarter of 2021, indicating that the country is not doing well in its numbers for external trade. Now, shouldn't this bother us so much, especially the rising monolithic export profile in the oil sector, despite plans for deregulation?
Definitely, it's a concerning metric. It's concerning for us, particularly as a country, considering the fact that we've been happening a lot on diversification of the economy over the past few years. You look at the fact that a sector that contributes less than 9% to the total GDP or the total economy of the country accounts for well over 80% of the total export earnings of that same economy, and that is quite concerning. And clearly, we can see from the trade data that we can see how susceptible we are to wide swings in the oil markets, particularly where, for example, last year when oil prices declined significantly, and this year when we are, seriously struggling with improving our production due to, issues across some of the key export terminals for our crude oil exports, really. So the fact that we continue to rely heavily on crude oil will continue to pose significant challenges for us from a trade perspective, and that speaks to the fact that there's a lot of work that needs to be done to diversify our export earnings from just crude oil. You can see our trade deficit for Q3, for example. The reason why we really had a deeper trade deficit, if you look at Q3 compared to Q2, was because, number one, yes, we imported more, but number two, our exports were not able to catch up with our imports because we couldn't significantly improve oil production in Q3, even though prices remained fairly favorable. But now we have started seeing prices come under a bit of pressure with the emergence of the Omicron variant, which speaks to the fact that we might likely see crude oil exports still continue to remain under pressure. And clearly, it's high time we avoid being caught in this web of oil market volatilities and try to diversify our export earnings to other key sectors. Let's look inwards, look at the agri sector, the mining sector, and see what we can do on that front to strengthen our exports. And I think there's even a lot of work we can do in terms of improving our import efficiency by reducing some of the items we import and producing them locally.
Ayo, the NBS data for Q3 also shows that crude oil transactions of course, accounted for 89%. You alluded to that in your first submission. That's of total merchandise export. Now, this is the largest in volume, where manufactured goods only stands for about, accounts for like 11%. For a country keen on intra-Africa trade, we discussed trade extensively on this show yesterday with regards to what is happening across the continent. And of course, one way the AFCFTA. Do you think Nigeria's manufacturing industry or the sector in its entirety is ready for this feat ahead?
Okay, well, clearly there's still a lot of work that needs to be done in terms of being able to compete, internationally within the manufacturing space. We are still very much behind other economies in the world, particularly when you look at terms of the business and operating environment of most of these countries, as well as the level of industrialization that they have attained compared to where we are in Nigeria. There's still a long way to go. I think when you look at in terms of our relationship with African countries, our trade relationships, unsurprisingly, right? You look at the trade data for Q3 as a good example. We have a trade deficit with every other continent in the world except for Africa, which means we actually export more to African countries than we import from them, right? And that points to the fact that that is a significant advantage we can take. We can look at and try to ramp up that advantage further. And I think one of the key ways that can be achieved is, number one, we're looking at the Dangote refinery coming up on stream next year based on communications from the company. There's expectation that Dangote refinery will kickstart operations from Q2 next year. And should that happen, it means, we begin to produce enough refined petroleum products, number one, to take care of domestic demand, and at the same time, we'll be able to export to other African countries. By doing that again, we're expanding that trade surplus with the African region. So that's one oil refining as one segment of the manufacturing industry, basically, is one that, we are likely on the road to dominate in the coming years, largely due to the efforts of the private sector. But overall, you look at all the other key sectors in terms of manufacturing of other items. For example, if you take out maybe cement, for example, you look at all the other key manufacturing items, we still depend heavily on importation of a lot of these manufactured items, and we need to be able to give ourselves some sort of advantage on that front in order for us not to be left behind when compared to other African countries. You look at with the emergence of AFTA, it means other African countries with better business environments, better economies, and stronger labor markets in terms of the quality of workforce, in terms of the quality of economic policies, and the quality of the business environments. Economies like that across Africa would likely benefit from foreign investments to establish to establish industries, establish manufacturing plants in these key countries, and they begin to produce, and then from there they're able to export to Nigeria at zero tariffs. So a lot of work needs to be put in terms of trying to prepare the economy to adequately take on the rest of Africa and dominate the manufacturing space. But until we revamp until we put in efforts to improve our economies and how companies are able to thrive within Nigeria, we are likely to face significant challenges on the trade fronts going forward if AFTA comes on stream and is fully implemented across all the countries. So the key focus is on improving our business environment, making our business environments more habitable for businesses and for foreign investors to be able to bring in their funds, and then they are sure that the economy is going to be favorable for them, at least, not with full certainty, but with a degree of confidence that the economy should, favor them, and that the leadership are, particular about ensuring that the economy continues to thrive and that businesses continue to thrive.
The report also shows that, staying with the manufacturing space now, manufacturing, the sector is still doing well, but high number of importation. The sector is doing a lot of high level of importation at the moment. And this clearly shows that we do more of imports rather than exports. Well, it's been like that for some time. But this doesn't really look good. Coupled with the fact that we even have some restrictions in some countries at the moment, how do you see this affecting production and, of course, movement of goods and services moving forward?
Okay. Yes. I think if you look at the Q3 trade data, you see that imports, in terms of our imports, looking at our total imports, manufactured goods, accounts for is the most significant chunk of the total goods that we import, and then that's if you take the manufactured goods as a whole. When you look at it on an individual commodity basis, then definitely we'll be talking about refined petroleum products. But manufactured goods, accounts for a significant, if not, it accounts for the most portion, about roughly 60% of our total imports. So when you look at that, number one, when you look at the degree at which you rely on importing those items, you look at it and you say, if we have to rely on so much on importation to be able to bring in and meet our consumer demand there. It gives you an idea of how large the consumer base is for Nigeria and how attractive the Nigerian consumer market is for businesses. But as attractive as the consumers are, it's almost like chalk and cheese basically. The Nigerian consumer market is very much attractive because of the large numbers, although we can speak to the fact that there's a bit of poverty, not a bit, there's a lot of poverty issues, with that market. But nevertheless, the market remains very attractive. But it pales in comparison to the economic environment, right? And that is why businesses are not able to thrive. You establish businesses to produce some of these commodities, and within years, we've read stories about so many businesses that have started, the automotive industry, for example, how, it was booming and doing well in the 1950s and the 1960s, and over the years, bad economic policies and relationship with the political side of the operating environment, made the industry sort of cave in, and then we have to rely significantly on importation of automotives now, right? So that's just a perfect case study. But in terms of improving that situation going forward, clearly we need to be able to try to look inwards and see how we can improve production of some of those items locally, right? We've been able to produce our automotives locally in Nigeria, and we have companies that are doing automotive production in Nigeria, for example. These are items that we can try to look inward and say, can we empower domestic companies to be able to produce a quality enough automotives to compete with these imported items? You look at the refined petrol side of things. When we down to refinery coming on, we might be able to produce refined petrol, and when that reduces our import burden. So those are just examples of items that we can begin to look at and try to take them off our import bill to reduce the pressure. Now, speaking to the travel restrictions that we have across the globe right now, would that be a significant concern for importation of these items, since we rely a lot on importing them in order to meet our consumer demand? Well, we look at some of our trade partners, some of our key trading partners, particularly in Asia. We are yet to see any significant move towards placing Nigeria on a travel restriction list. So on that front, it's still looking fairly positive. But should the Omicron variants continue to spread globally, and then it leads to a situation whereby we need to see more travel restrictions and begin to see that from our trading partners, then it becomes a key concern, and it means that the supply side of things may be restricted over the next months, and as a result, we could even see prices increase as a result of that. But for now, we don't have so much concerns regarding that, because most of our trading partners, particularly in Asia, that's talking about China. You look at European markets, say for maybe UK, for example, which we don't do a lot of importation from. We are still very much fine on that front regarding imports and our trading activities for now. But should things get worse from here, then we could see a situation whereby we face more travel restrictions, and then that could impact on the supply chain of these commodities being imported into Nigeria.
Let's almost wrap up now this segment of discussion. Now, also the export to India, that's Nigeria's export to India, accounted for about 758 billion naira in exports, an amount that exceeds the total exports to Africa, which is about 668 billion naira in the period. This is a wide margin if a sole country is recording more exports than an entire continent. Is there a problem of target market audience, particularly considering the AfCFTA that we keep talking about?
Well, definitely represents a problem, and I think I alluded a bit to that when we were discussing on improving intra-Africa trade, particularly with the advent of AFTA. But clearly, you look at our exports to India largely. What we export largely to India is basically crude oil, right? Because they're able to refine crude oil into petrol, and then we also import from these countries, likes of India, Netherlands, and all. But in terms of our offering to the African market, right? The problem is, what do we have to offer? Our biggest export is crude oil. There's no big refinery in Africa to be able to absorb the quantity of crude oil that we're able to produce as a nation, right? So it means we have to export that crude oil, the crude oil that we produce, to Asian countries and European countries like the Netherlands and all that have the refining capacity to be able to take on our crude oil supplies. So when you look at what we have to offer, it clearly means that we don't have anything to offer the African. We have, well, let me say, we have very little to offer the African market, right? Because we have, bearing, apart from maybe likes of maybe cement and some other agricultural commodities that we export to other African countries, we actually have little to offer them. And if you don't have so much to offer that market, then you end up focusing on the market you have something to offer. So for us to be able to improve intra-Africa trade, we first need to have something to offer. It's beyond just signing the documents and agreeing that, okay, we want to implement AFTA, we want to improve intra-Africa trade. Yes, that is understandable, desirable, and brilliant policy documents. But if there is no market when there are no goods to sell, there's only a market when there are goods to sell and there are people to buy those goods really. Yes, the African market is large, the African continent is large, and the potential to improve intra-Africa trade is there. But for us as a country, we need to ensure that we have something to offer the large market. And it starts from, again, like I've said, creating an enabling environment for manufacturing firms to develop. I mean, it's not just too far away. In the 2010s, early 2010s, 2010, 2012, 2013, when we're going at a very fast rate, was largely because we're seeing the advent of, development of new companies in Nigeria. We had significant influx of foreign capital trying to set up industries, factories, and all to develop projects to export to some of these African countries. But many of these investors have had to leave the country because of unfavorable economic policies and all. So we need to make the business environment favorable for investors, favorable for foreign capital to come in, favorable for even domestic capital to be able to invest in these sectors, to take on more risk, to create new products, to harness the potential we have in so many other sectors, in agric, in mining, and even in manufacturing sectors, in order to have something to offer the African market. When we have something to offer the African market, then we can now begin to discuss the bottlenecks, the logistics involved in terms of trying to get these products to other African markets. But as long as we only have crude oil to offer, we will continue to see this significant imbalance. When you have crude oil as your major export commodity, then you have to focus on the markets that can absorb your crude oil supplies. So that is largely the reason why you can see our exports to India being far greater than our exports to all the whole African continent as a whole. It is because we are reliant on crude oil and we have nothing else to offer the African market. And for us to offer anything to the African market, we need to make our business environment much more conducive for investors to develop industries, to create products, to be able to export to these markets.
I'll wrap up on that note, and I will take it up from where you actually stopped. When we talk about making the environment more conducive, what sort of conversations truly do we need to be having, maybe regarding our international trade policies, and of course, investment promotion, how we try to woo in investors? We have issues around, we've identified manufacturing, security, and all of that. So can we just highlight some of what really government needs to do? We could just be advising them and someone could be listening.
Well, I think first thing is on the aspect of infrastructure. Just quickly, on infrastructure, clearly we know that the state of infrastructure in Nigeria is very, very terrible. There's a lot of work that needs to be done on that front. You look at the power sector, we've been suffering. I think at the start of the program, you mentioned how output in the power sector has been declining, right? And once output in the power sector is declining, what that means is we are having lower and lower power supply. So if power is not functioning well, the road network, the rail network, the transportation network, basically across all the different types of transportations are not functioning well. These are key infrastructure that you need to ensure are functioning well in any industrial economy. Every industrial economy would have adequate power supply. They would have unquestionable and quality transportation network. We lack these things when you look at our infrastructure. Number three, you look at in terms of policies, government policies, for businesses. Really, we've had so much of policy backflips over the years. Critical example is taking Lagos State as an example, where we had the issues with the use of tricycles and motorcycles. Also, we had companies who came in with significant investments. The go-karders, the OPAs, and it was a booming sector. And then few months down the line, the policy comes up that, okay, they can fly certain routes and things that could significantly cut the amount of activities that they can do. So these policy backflips are concerns for investors. If the government, if the economic policy managers are not seen as being consistent in terms of their policy framework, that will always create concerns for foreign investors. So on the policy point of view, in terms of even so many issues that we can't even begin to elaborate on now, in terms of business registrations, enforcement of contracts, these are all issues that continue to plague the business environment. Infrastructure is a critical problem. But right now, if there are, let me say, two problems that we can solve that immediately should catch the attention of the foreign investor community, will be our infrastructure, speaking more to power supply, and this insecurity situation within Nigeria, because those are critical things that make major headlines across the globe for us, and those are the sound bites for investors get. So if we're able to resolve those two key issues, then I think that we should see a change on that front. We should see foreign investors begin to come into the economy, and then we need to still fix all the other issues regarding contract enforcement, regarding business registrations, regarding bureaucracy within, government entities responsible for regulating businesses and all. But those are all conversations for another day. But clearly, all those issues must be resolved in order to attract foreign capital into our economy.
It's always a pleasure having you. Ayorinde Akinloye is an investment analyst. He's with United Capital PLC. Thank you very much for spending your afternoon with us. We do wish you a great weekend.
Thank you, Dodo. Always a pleasure. Have a nice day, too.